The dollar, look, the dollar is driven by the fears over the new Trump administration and what tariffs mean. And that has pushed the dollar higher and rates higher. And this whole thing is the exact same setup, and you and I have talked about this, of the dollar and rates in 2016-17. With the same set of Trump outcomes and tariffs and the same policies, it did the same thing. The first thing Trump did when he got into office was say, I want a weaker dollar. And he's already said rates are too high.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal dives into Trump's economic strategy, covering tariffs, dollar strength, and high-stakes negotiations. Plus, he breaks down crypto's liquidity role and how to prepare for the next big rally. Let's catch him now.
So they're not stupid. They also know that they've got debt to roll, that they also have trade negotiations to do. So my view is they will use the stronger dollar as a carrot and a stick, which is China, you're going to have to devalue your currency unless you play ball with us. But if you do play ball with us, we will inject liquidity into the dollar system, we will lower the dollar, we will jawbone it lower, and you can then stimulate your economy, because the Chinese cannot stimulate right now without risking a breaking of the yuan peg, which they don't want. So I think it's all part of the Trump trade negotiations, and we know that the teams have already been kind of speaking to the Chinese and the Europeans and everybody else. When you go back to Besant, who I know decently well, Scott has made it clear that the dollar is too strong and that he would want a weaker dollar. You know, lower oil, weaker dollar. They want easy financial conditions because they want to win the midterms, and that's a big thing. Then there's the new guy who's coming in. I can't remember. Felix from Blockworks interviewed him. Can't remember his name. The Economic Council guy, Stephen Muran. Yeah, very interesting interview. And Stephen spent half the interview talking about at some point we're going to need a Plaza Accord if this continues, but we are going to have to get the dollar lower. Now, I don't think the Plaza Accord idea is this time around. I think it's probably closer to 2030 that people are just going to go, we can't deal with this dollar. Now, the dollar is structurally strong because the world is 50% in debt in dollars, and there's a shortage of dollars. The moment the US takes liquidity out of the system, it's a game of musical chairs, and it drives the dollar higher. So, you know, people will bid up for dollars. So that's where we are. We've also, as you talk about a lot, we are waiting for the injection of liquidity that comes as the reverse repo redrains back to zero, then probably the end of QT, and then the draining of the TGA. Also in the Fed minutes, sorry, I'm trying to get across a lot here. Also in the Fed minutes, the previous minutes, they had talked about that they're not keen to rebuild the TGA immediately afterwards and have a tightening of financial conditions. So what does that mean? I mean, either there's another way around it, or as you possibly suggested, it could mean QE, which sounds ridiculous now, but who knows? The other thing this financial conditions is doing is pushing down forward growth expectations. And so it starts to make you think Q1, Q2 might be weaker, and that gives the Fed more cover also to cut rates. So lots in that. I don't think it diverges much from your view.
Bitcoin, the world's largest cryptocurrency, has captured the attention of investors as it approaches a critical moment. With a market capitalization of $1.8 trillion, Bitcoin represents over half the total value of all cryptocurrencies, which currently sits at $3.4 trillion. Following a staggering 120% surge in 2024, much of its growth came after Donald Trump's U.S. election victory in November. The president-elect's pro-crypto stance has fueled speculation that his administration could bring policies to drive further value creation in the crypto space. As Trump prepares to take office on January 20, Bitcoin's potential to rally has investors buzzing. His administration's plans could include bold ideas such as establishing a strategic Bitcoin reserve, where the U.S. government might actively buy Bitcoin, signaling strong institutional support. Trump's nomination of Paul Atkins, a prominent crypto advocate, to lead the SEC further underscores this pro-crypto outlook. Bitcoin's decentralized nature and fixed supply of 21 million coins make it an appealing alternative to traditional assets like gold. With analysts predicting a potential price of $1.5 million per Bitcoin by 2030, some investors view it as digital gold, offering security and scarcity. Although Bitcoin remains a speculative asset, its increasing acceptance and the possibility of government backing under Trump's leadership could ignite a new wave of adoption and price appreciation. For those considering an investment, buying Bitcoin before January 20 could be a strategic move. While regulatory support might not dramatically change Bitcoin's trajectory, a government-driven reserve could propel its value significantly. However, given its speculative nature on modest allocation, 1% to 2% of a portfolio might be a prudent choice to balance potential rewards and risks.
Okay, so this is from the January GMI. This chart at the top is, let me just get rid of that. This chart at the top is global M2 last time around versus this time around. And global M2 last time around, this time around, it's identical, which is kind of weird. Then we also have, beneath it is the chart of the NASDAQ, and that's pretty much identical. So we have a repeat in the monetary conditions, global M2, because the dollar was strong, that's what's pulling back global M2. It also caused markets to readjust. When we look at Bitcoin, we can see the phasing's out, but when you kind of match up the phasing, what happened, it was the 4th of Jan, we had a correction like we're having now, and then Bitcoin went up. And once you match the two, you kind of get a very similar pattern. So what we've got is, and also here's the Economic Surprises Index and the DXY. It's been coming lower. It should drag the DXY, change rate expectations. Julian just put out a tweet this morning about all of that. So everything is here. Fed cuts may change because there's now like 25 basis points priced in. Okay, as a risk reward, there's a decent chance we get something. So it's like all the factors are in play, and whether the market sniffs it out or not, I mean, we got another week until whether we get fuller announcements beforehand or we have to wait for the inauguration and stuff. I don't know.
XRP is gaining significant momentum, showcasing remarkable strength in comparison to the broader cryptocurrency market. On January 11, the price reached a daily high of $2.60, breaking through key resistance levels and signaling a bullish shift. Despite a brief dip to $2.33 on January 13, XRP swiftly recovered to trade above $2.45, reinforcing its resilience. The XRP/BTC trading pair also suggests an optimistic outlook. Last week's weekly close above $2.50 marked the highest candle since October 2022. This development hints at a potential bullish breakout that could surpass a 4-year resistance level established in May 2021. Analysts highlight that this resistance has been tested multiple times, with the latest trigger occurring in November 2024, signaling growing market confidence in XRP. Technical analysts are pointing toward even higher price targets. Notable traders like CROVTOWZRD foresee XRP reaching $4, with long-term projections extending to $8. Their analysis is bolstered by fractal patterns reminiscent of XRP's 2017 bullish run. Another prominent analyst, Titan of Crypto, shares a similar outlook, emphasizing that the recent invalidation of a death cross by a golden cross adds further weight to the bullish case. On January 11, XRP also achieved a bullish breakout from a 7-week-long pennant pattern. The technical target for this breakout stands at $3.50, a 50% gain from its breakout point of $2.35. For XRP to maintain this upward trajectory, it needs to establish support between $2.60 and $2.48 by closing above this range on the daily chart. Additionally, the Relative Strength Index, RSI, consolidating above 50 signals sustained bullish momentum. Should XRP achieve a daily close above $2.60, it could quickly climb past $2.72 and $2.90, capitalizing on the sell-side liquidity above these levels. As the altcoin inches closer to its all-time high of $3.40 set in 2018, its recent performance suggests that a rally to $4 is increasingly plausible. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.